Hello and welcome to our first Markets in 2 Minutes of 2026. This is Darrell from the Wealthspire Investments Team. So we used the last two updates of 2025 to sort of lay out the economic and fundamental backdrop for markets as we moved into the new year. But of course, there are a lot of external factors as well that could influence things as we progress further into 2026. And perhaps the most obvious element of all of this is that 2026 is a midterm election year. Now, we have always emphasized and continue to emphasize that politics, both domestic and foreign, do not have a significant enough influence on markets for us to weigh them heavily as we think about the long-term trajectory of both equities and bonds. But history does tell us that midterm election cycles are far from irrelevant, and so we wanted to lay out our best thinking here and sort of weigh on this. First of all, midterm elections have historically not been favorable for the incumbent party. In fact, with the exception of the 1998 and 2002 cycles, every single midterm election dating back to 1946 has resulted in the president's party losing seats in Congress, with the median result being that the president's party loses about 22 seats. If that were to hold true this year, the Republicans' slim majority could potentially be at risk, and that could lead to some political uncertainty that markets might need to cope with as we move further along in the year. And generally speaking, markets tend not to like uncertainty. And that's reflected in this next chart, which breaks down historical market returns into quarterly segments. And you might immediately notice that if you zero in on year two of the typical presidential term, which is, of course, the year that coincides with the midterm election cycle, the market's returns in those first 3 quarters of the year tend to be relatively weak. Now, I should note that there are any myriad of things that can influence markets, and we talked last month about some of the strong fundamental tailwinds that are supporting equities this year, but nevertheless, investors should be prepared for some bumps along the way in 2026, as that might be considered typical for a midterm election year. The good news is that the conclusion of the midterms tends to bring clarity, and that, as we know, can confirm for the market the composition of the new legislative branch and no longer have that cloud of uncertainty hanging over markets. All in all, this is to say that the equity market has a lot going for it this year, but investors should not be surprised if we see some bouts of volatility as we progress further and further into 2026. We'll be tracking all of those political developments as things evolve, and we'll be sure to share all of our insights along the way. Thanks again for tuning in, and see you next month.